Hey Alpha Fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that just sideways kind of action on the Bitcoin chart. Jumping straight over to the charts here, we can see that we've just been going sideways. This is the hourly, and so we've just been going sideways and kind of a chop here. Currently, I do have the updated pool on the screen for you. And so this one is just hot off the press. You can see that we were driving down here. And so we may have a momentum shift bouncing off of the 300 EMA on the 1 hour. And that could push us back into the momentum pool here around 30,297. If we do get inside of that line, then I would expect us to be able to take the trade to 30,316, an extremely thin momentum pool, not very tradable, but anyway, that's the setup. And then we would really have to see, can we flip the volatility pivot here at 30,336 in order to get any possibility that we're squeezing to the upside here. In which case we would target the bullish control zone somewhere around 30,429-ish for our next stop. Of course, if we don't get reaccepted into the hold momentum level, then we are going to be looking to see if we can hold the neutral point of control here at 30,282. And in failing that, then again, we could initiate a squeeze to the downside this time with the 9, the 20, and the 300. And then we would have lower targets somewhere near our lows, our range lows there around 30,125-ish, where we would enter the bearish control zone should we push any further. The top of that momentum pool is at 30,316, but the general continuation is 317, so just a little bit of wiggle there. Let's go ahead and jump over to the 6 hour just to give you the setup on the 6 hour. And here on the 6 hour, you can see that our EMAs are quite tight right here. You can see this weird kind of funnel shape, and that's usually indicative of kind of low volatility. Just everything's just kind of getting into one little straight line, and so probably an explosive move will come sooner or later just to catch you off guard. But for now, it's just making it just not easy to trade whatsoever. And you can see that in the momentum pool, which basically is just a thin green line here. And guys, like this is not a very tradable setup. It's just the reason is you can easily lose it. Just a blink of an eye, you can easily lose it. You can't see a trend within the pool, so it's very difficult to trade this. However, just remembering our principles on the 6 hour here, we are above the volatility pivot. And if we can get above the momentum pool and kind of embed ourselves above 30,289, then we could potentially have a trade up to the neutral point of control at 30,392. Now, that's where I'd like to see us to really hold somewhere above 30,392. Because that would put bulls back in charge of the chart, and then they would take full control should we be able to push up to 30,984 above the bullish control zone. Until then, we're just kind of in no man's land, not really clear what's going to happen. And of course, we could just very easily, you see this Darth Maul candle right here, liquidating people to the upside and to the downside. We could easily just get pushed below this structure and end up in a 9-4 squeeze to the downside, which if we did lose 30,275, then we would be looking at maybe a little bit of a chop at 30,230-ish, and then we would be retesting that volatility pivot at 30,085, lose that, and that's when things get pretty bearish for us. But guys, for right now, again, it's just chop. Currently, we have a higher likelihood of a 9-4 squeeze to the upside. No guarantee that that's going to succeed, but that is the current setup. So again, if above 30,289, you're going to be above the pool, above the pivot. Might be worth a chance. Or Or should we sit at the bottom of the pool and not really break down, or come down and then break back up into it? It might be worth it to just take a chance on a long there, with a tight stop loss, and making sure you bring that stop loss back up to your entry. Because again, they're liquidating people up and down, so you are going to get wrecked in this type of trading environment as volatility is contracting. Okay, so just be careful. Alpha fam, if you do take that risk today, it's not an ideal setup. But let's go ahead and take a look at the daily. And on the daily, we do see that we are just incredibly borderline once again. So, the good news is that we did pop, back up from this potential 921 squeeze to the downside. The problem is that's really normal behavior while squeezing. So what you'll usually see is, the 9 moves to the 21, and then the 21 comes back up to the 9, and then the 9 comes back down to the 21, and then so on, and the highs get lower each time, and that sets up the squeeze conditions, which then can have a pretty traumatic movement, probably somewhere towards the neutral point of control at 29,452, which if we don't get support from the 50 EMA, then we would likely to be squeezed to the bearish control zone somewhere around the 89 there. And that's at 27,600. Really, we do want to hold above 29,500-ish, 29,400-ish, because some of this chart starts to break structure. The bull flag becomes invalidated after that level. And that's not a small deal there, guys. It would suggest it would take a lot more work to get back up. And just to hammer that point home, we do have a bull flag formation here. We do have a wick low somewhere in that neighborhood of 29 500-ish, and again, should we get embedded underneath 29,400-ish, then that bull flag will be invalidated. Okay, and then of course this chart would be free to come back and test the bearish control zone somewhere around 27,600. Of course, it doesn't have to stop there, and it also doesn't have to fall as deep as that. It could just grab some liquidity and go, or it could even come back down to the 200 or 300 somewhere around 26. It's just things again start getting broken under 29,000. Let's just say 400, just for a little bit of wiggle room. Guys, yeah, I was showing you that we do have this trend line over here, which we can see basically gives us a lower edge somewhere here, which actually does line up with that bearish control zone. So should we break the bull flag and come back to the bearish control zone, this could be, the next bouncy area where bears are maybe getting rejected, and so we don't break the neckline of what would become a double top, right? This would become a double top should we get below that $24,600 level. And so we're really going to see, are we going to push up now, right? Because, we're in danger of getting a squeeze to the downside. So are we going to push up now in the next couple days, over the next couple days of the next week? Or are we going to start to decline, lose that $29,400 level, retest our trend line, and if we fail to hold that, are we going to test the neckline of this potential double top on the chart, which could then take us significantly lower, maybe even as low as 20 to 18,000? Okay, retesting the entire range lows should that double top take hold. And you can see a really simplified version of that right here. Double top, bring you up, pretty far down. Now, in this case, the setup was the measured move was to the just the trend line. In fact, that's what formed the trend line. So we can't even say it came down to the trend line. The trend line would have been like this at first, right? So it actually broke the trend line and came significantly down. And that's what could happen right here if you understand what I'm trying to, teach you there, Alpha Fam. Again, just to put it in simple terms, There's the potential double top. All right. In this case, this one originally had a trend line like this. You can kind of imagine it's just the same thing as like this. The double top ended up breaking down, and it had to create a new trend line. So if this double top breaks down, it could end up having a measured move that's going to force us to create a new trend line, and then we'll see, do we hold this area, or do we go on, again, Mr. Toad's wild ride to those crazy lows that some of the Perma-Bears want to see. You know, a double top of this size is pretty strong, right? Pretty strong. But again, we have plenty of opportunity this week, and you know, to try to see, are we going to avoid that double top scenario. All right, guys, I think I'm going to leave it there. The only thing that I would probably want to add is you know, just a quick double check on our volatility here on the daily. And we can see that, you know, we are still in very low volatile conditions. So that's why price movement isn't going too much. If we do bottom out and then start to push back up, I think that'll be the indication that the market has actually chosen its direction on the daily. But on the daily there's no kind of definitive action going on. This is just mudding around at the bottom at low volatility, just making trading, you know, kind of, you know, wishy-washy. Jump over to the weekly. The weekly is saying that it is ready to go. So that big move that I was telling you, that either we could pop, you know, up now, or, you know, or in the next week or so, or we are facing the potential to really have a critical breakdown. The weekly is telling us, yes, that's really possible. So it's building up some energy for a big move there, guys. Let's go ahead and jump down to the 6-hour just to see what the 6-hour is saying. 6-hour is ready to do something. That's just a function of low volatility. It could take a couple 6-hour candles. And then the 1-hour, you know, the 1-hour just had a little bit of a shakeout where it had that Darth Maul candle up and down. And so, you know, it's still deciding which direction it's going to take as well. But you can see that the 1-hour is ready to start leading, and then that'll probably drag the 6-hour with it. And then the daily may be forced, you know, to go with the 6-hour, or maybe we'll push back a little bit, maybe for a couple days, and then the weekly is eventually going to tip over. And guys, just to, you know, make sure that we're not too perma-bearish here, I just want to remind you again, like, we do have a bull flag. It hasn't been invalidated. That measured move for the bull flag is still okay. We can still get somewhere in the high 30s. And additionally, even if we do invalidate the bull flag and break down, we do have this area right here all the way down to 27,000, which we could still kind of rocket off of that and just kind of liquidate people to the downside and then push up. And then, of course, we don't have our critical breakdown until we're in that zone of 24,500 to 25,300. We're going to start getting really worried. And then, of course, under 24,400-ish, we're probably actually in the process of breaking down. Just want to summarize that up for you guys. That's your alpha for the day. Stay safe and happy trading.